Welcome to SMF Street, to the SMF Street Traders. What we're going to be talking about is 9/7, which is tomorrow. Today's date's 9/6, 2010. Happy Labor Day. What we're going to be talking about, Key Pacific, is the Dow, the pro and the con between the bear and the bull. The bear and the bull of the Dow, the bear and the bull of the S&P, NASDAQ Comp, NASDAQ 100, Amex, and various other markets. Most important one is what is going to be the bear and bull con for the trade. Okay, we're coming into a point of time where we know that the GDP is much lower. We know all the data is very bad. We know that the failed policies within the administration have not been favorable to the actual ratio of the economy. And the ratio to the economy is various different things. One is consumer, one is institutional, one is corporate. Within these structures is what we have found out is the administration and the policies current have not been favorable because there are prescriptions that can be given to this economy. And basically we talked about many months ago when it got down to this November primary election, it's going to get down to the Democrat and it's going to come down to the Republican, which is all good and well. Each have different behaviors, each have different beliefs and mindsets. So far, under the Democratic structure, they've done the best that they could try to do in some respects based on the nature of the problem in this economy. But then there's lots of things that they have done that in past performances have always proven that stimulants or stimulus or money that goes into the system and trying to buy growth in GDP never ever pans out. Because if it did pan out, you would have never went straight down here. And every time that these expansions happen, just as the great 96 breakout expansion, they last for 3 to 4 years, but then they collapse. We've done this over a multiple of many decades within our society. And that society is a capitalism society. The other part of the society is a consumer society, which is one of the most important parts. But just like in 2003, that expansion went right up to the top of the 2000, and all the stimulances, when Bush came in, they did all of that, but guess what? It went miserably down. They're not sustainable. I haven't found one yet that has been. I can tell you that this is a stimulus here up to the top of that line. Now, favorably, the stock market loves to have what we call a Christmas rally. And September is a time where people can sell the winners and buy the dogs in September. And or various different institutions have a way of balancing their books in September. And we have a lot of pessimism built up in the market because of failed policy. However, the wild card, as we've told people, is that in the short term euphoric move between 9/7 and 12/31 of 2010, the wild card is what would make people feel better about the world that they live in. It doesn't mean that what I'm going to say is sustainable, because I'm not saying that. What I am saying clearly to SMF Street traders is markets will have overbought and oversold conditions irrespectively of government policy. It will have its own ranges. With the triggered behavior from policy, with the amount of hope that someone hopes that someone starts doing something right for the U.S. economy, is that hope is extremely built up, which can create on the initial knee-jerk as a great feeling of exuberance that, hey, finally we're going to come out of the doldrums. Look, it's going to take a number of years before that happens. And I want SMF Street traders and investors worldwide to understand that. And that at moments there's going to be times where we re-leverage like we did over here in 03, but they always fail, just like the ones in 96. More importantly is, if you get back over here into these years, and I'll just show you what multi-monthly years look. 73 was a down year. up to the 76, back down. This was a sideways environment back then, but then back in those times in the 70s, naturally, and look at that big move up in 82 off of the bottom. But look at the range bound, the yearly trade. These are yearly up moves and failures. These were another yearly favor, went all the way down in 73 and 74. Pops all the way back up into the highs of 76 where the downtrend started. That's how mathematical ranges and exchanges work. Policies created that move there. Failed policies at the time and things that were happening economically caused that there. The lesson is that when that exuberance and that hope comes into play, the wild card is that the administration is going to come out and try to do the right thing. What would be some of those things that need to be done? One would be, we know that we need to stimulate the core asset of America, small businesses. We've said it 2 years ago, and at SMF we said it till it was blue in our face. The year and a half ago about all of these jobs that were going to be created, and we haven't gone anywhere in those jobs, is that part of your taxpayer stimuluses was to get people back to building your infrastructure in America. I do believe that money should go into infrastructure because I believe that the power grids are not healthy. I also believe that there's a lot of infrastructure that's very key, that people should go back to work and money should be spent there because it will be a good thing and a sustainable thing versus me bailing out General Motors or Citigroup, okay, and other banks that were bailed out. What should have happened is the banking system and the icons in America that managed their businesses incorrectly, that were at their knees of bankruptcy, just as Lehman went down, is that at that point in time, the stimuluses were done totally incorrectly, as I said, before the crisis would happen, and we have a perfect track record of it. Go back and look at all of our 2008 blogs. The thing that I would tell you is this, SMF Street, is the way that it should have been done was the taxpayer money should have went back out to the core asset of America. What is the core asset of America right now? In my view, small cap, mid cap, medium cap, and consumer is the core asset of our society, the society that you live in. Throughout the State of the Union of every state, is that the states remain on very, very shaky ground as far as their fiscal debt goes in each one. Some have fared better than others and some haven't. The most important part of what I'm going to tell you will be the euphoric part of Wall Street. The trump card, or the deuces wild in the deck, or the joker for that matter, the trump card, the wild card, is that this administration gets humble and that it comes out and it does the right thing, and that there are healthy stimuluses that can pay themselves back over time. Right now, the way that your deficit is, just based on the higher tax rates moving forward in the next 5-10 years, they can't even pay it back. So what needs to be done? The wild card is they're going to come out and everything that they didn't do so far that hasn't worked, they're going to come back out with that package that they promised you, and they're going to start putting these temporary workers back to work. We do need people to go back to work, and there's nothing wrong with that, but we need to put them back to work in a healthy way. That's called a sustainable, healthy way, not a temporary 6-month job and then they're right back in the unemployment line and collecting benefits again. Part of what America feels in society is that the government owes it because they took it from them. No, they didn't. Corporate of America took it. Because when all of the shenanigans led up to the collapse, is that everyone played a part. And everyone had responsibility within their parts. And so therefore, the core asset of the retiree, the 401k holder, and people who try to invest in the market to supplement their income outside of their normal professional capacity level that they work in the professional community, whatever that may be, is to grow your wealth so that you have an equal opportunity, that when your working years are done, is that you can enjoy what time you have left, and that you are emotionally, financially, and emotionally stable. And so far, the system is not working for people, and more people that had that dream for them has been shattered. Because where we are in the current economic environment does not reflect that current outcome for those folks. And this is the worst thing that could have happened. And people to have to go back to work at 65 years of age is totally ludicrous. Because either they lost their life savings or their homes that they lived in because of getting over leveraged as America did. And the deleveraging process is here and has been, and there's been a lot of pain and suffering in our society. And the society is as follows. Is that we cannot continue down the road of irrational exuberance thinking that the way that life was back in 2003, 4, 5, and 6 during the expansion phase, and everyone's making a lot of money and everyone's loving life. And everyone wants life right now to be that way. That was the bubble. And what America has done in failed policies is trying to keep that bubble sustainable. That's not the true thing. We're going to come down and grow this economy and let America fall on its own 2 feet. And things need to be done right, where capital reserves and capital risk management ratios are done right, from the very smallest business to the very top. And basically, the punch hole is that every year we like to have a great rally, and everyone wants great bonuses as at the end of the year on Wall Street. And Main Street deserves their bonuses that they work for and do things within the market. And basically the pro and con about this market move is that even if they come out, the wild card is they come out and they totally do about face. They get humble. Well, what we've done hasn't worked. We haven't created the jobs that we did. Here is what we're going to do. And we're going to, give that payroll tax holiday. We're going to give those extended credits. We're going to give those. There are healthy ones that put people back to work that can get a stimulant directly to them. They haven't got nothing yet. The banks are hoarding the money. So what I'm going to say is that the market remains in a downtrend. We have the election, which is going to create volatility and exuberance. If they come out and say that, we're going to pop up on the Dow. We're going to go back up and we're going to test the highs here. Okay? Now, that's if they do the right thing within the right policy. So basically, in the short term, we're still going to have imbalanced, overbought and oversold conditions between now and the end of the year. And I'm going to go to part 2 on this video so that this video is not too long.